For Tuesday the 10th of June. I had some pretty sick ideas today that played out, however, not exactly as I expected, and end of the day a bit negative. But yeah, I'll go over what I was looking at. To start with, I'm going to clean up this chart a bit. This indicator here is simply showing the flout, the CBDR and Asia, and then midnight price, then 2 a.m. and then London session. So I was just studying the London normal and delayed protraction. So that's all that is. But you can see midnight sitting down here on gold, which I'm going to hide this indicator now to clean it up a bit. So I started off on gold because that is what I still have a pretty clear idea of what I want to see. I'll quickly show you what that is. So obviously high time frame is bullish, but if we look at the high time frame, you can see we've got the range from this high down to this low, and when we drag out the midpoint of that, we're sitting above that midpoint. We had this push up, a pullback, and then another push up, but spending a lot of time up here, not really showing much strength, and looking like it's likely to pull back into a discount of the range. So I can really see us dropping back down into a discount. We also actually fell short of EQ here, so this is a likely draw. We've got this weekly WXCE down here as well, and yeah, the shorts are looking really nice. So that's what I wanted to see, a short. We sold off on Friday after putting in this high here, selling off. That did hit a premium, so it rolled over really nicely into the range. And yeah, closed down here. I got long at the about 295, so inside that work essentially. We got long, looking at this breaker block on this side of the curve, and the fact that we had this nice pool of liquidity with 300s down there. So I did get long there right at the open, with I left a limit order in over the weekend. That played out nicely. But the mistake I made, so yeah, I carried this trade up to about here. That was fine. But what happened today essentially is I measured out the range from this high down to this low, and this is the shorter term dealing range. And so once we'd hit this buy side, I wanted to see this as, if it wanted to go over here, like I saw this as being a premium. I was expecting it to potentially reach up a bit further, and in fact I had a limit sell order sitting up at 53, so exactly here I had a limit sell order sitting up there overnight, which didn't get hit. But yeah, Monday rallied up, didn't quite get me in, sold off. But I wasn't entirely convinced this was the high because I wanted to see this old previous day low hit at least. So I wasn't panicking. I thought, okay, we'll probably rally back up there. Sure enough, overnight we ripped back up really nicely. So that was really cool to see. If I had been at the charts, I would have definitely got long in here, because this model is also like enticement of shorts going into Friday. We then engineer a high. This one doesn't really count, but we engineer a high, entice lower, and then that framework becomes, okay, whoever was short on Friday and Monday, they all drag their stops down to here, and we just rip into them. So that would have been a really nice long to take advantage of, which I could have done. And as you can see, midnight's dropping down, failing to take out the Asia low. So that's supporting the idea of this being a market maker sell model. Ripping up. I looked at the charts at just after 6 a.m. So we had already displaced and we're sitting just in here. I was looking for a long to reach for that previous day high from this area. But yeah, didn't quite catch that. But yeah, it's a really nice setup. And yeah, so because this was already a premium from this shorter term dealing range, I considered that, okay, we're hitting premium buy side, and although I wanted to see it go a bit higher, I was thinking that, okay, well, if it shows me real displacement lower, then I suppose I'd have to trust this is the high. And as you can see on the hourly charts, so I'll drop down into the low time frame on here first. So you can see this is 7 a.m. opening up, rating the previous day high, then 7:30 we sell off, but then we run up again once again, and this is the high time frame EQ. So from the actual high up here down to the low, that's EQ. That's what I should have been expecting us to hit. But as you can see, rallied up, drop down, and if I drop to the 1 minute real quick, I'll show you what I was looking at the open. So this is the 7 a.m. open. I did have the anticipation that we could sell off from somewhere and we'd hit that old previous day low I was looking at from over here. But I didn't feel quite comfortable taking this short despite seeing it. So I've got an entry model called the post XX30 model, where we basically have the halfway into the hour, and then I'm expecting if there is going to be a hourly PO3 where open, high, low, close, then I expect that if we start showing bearish order flow after the halfway into the hour, that should continue to push low. And I came to the charts, looked at it roughly here, and I saw how we just dropped below, back below the previous day high, previous day low. We'd had this big rally up, and I thought, oh, that could be the entry, maybe not. I didn't actually see this at the time, the new day opening gap, but I decided to sit out, which was a good thing because I didn't have enough conviction. I only had maybe a 6 out of 10 or 5.8 out of 10 conviction, which is definitely too low, so perfectly fine to sit it out. And what didn't give me that conviction was the fact that we'd only had 2 drives. That's probably one of the major things. And it just didn't feel quite right because let's say 6 a.m. had put in a high like that, and then 7 a.m. had tapped into that high. Then maybe I'd feel comfortable. But at where we were only sweeping the previous day high, but there was no closer narrow term buy sides that we were taking out. So it made sense to sit out of this one, and I'll let that one go. So I'll go through all the trades I took and my reasoning, but keep in mind that the whole idea, I think it's recording, yeah. The whole idea of my day was that I wanted to get short up in this area somewhere to target that high time frame sell side, which, we might get a nice entry in here at some point, maybe in Asia, but yeah, I wanted the short, essentially. So we began selling off. I had already, prior to us hitting this previous day high, which is this level here, I'll drop down to a low time frame. But prior to us hitting that previous day high, we were sitting in this area, and I'd wanted to get long on a drop into this fair value gap, into this 15-minute fair value gap. And I had some buy limits down here. At this point, we'd already hit the previous day high. We began dropping back down. I wasn't going to get in, but then I saw this rally up here, and I saw at 8 a.m. had rallied a bit and dropping back down. I thought, well, it's pretty tight risk and get in at this volume imbalance, and put my stop loss down below this low because I saw this as being a BPR, and I didn't want to see the midpoint taken out, which if we're about to reverse, maybe it can get taken out. So, but yeah, that was my thinking, and I did pretty good with the entry. The problem is that it wasn't really a trade. I did alright with the entry. I waited for a low to be engineered at a discount. Then when we dropped into that low, I waited until it slowed down a little bit, and then I got in. I got a good fill just there. I then walked away from the charts, had my stop sitting below this low. As you can see, it perfectly took me out before reversing. So that's not ideal. I suppose, the part of my reasoning for taking the long, however, it's just that this did not look like a high on the hourly chart. It's partly why I didn't want to take the short in the first place. Like, we drag this across and look at that. When we have this big rally, a bit of consolidation, and then just a wick going above the previous day high, to me that did not look like that was going to, create the high, because generally you'll have a really strong looking closure on the hourly candle that makes a really nice order block that creates the high, because you're enticing longs before the reversal. That's a bit more substantial, this one here. But that 7 AM candle just did not look like it. And also, after hitting a significant liquidity level like this previous day high, a lot of the time they'll print something like this that I call it retail FOMO. So whoever was short, they just got taken out, and now they see this big wick. They're like, oh damn, I knew I was right. So they get in short again down here. And so I wanted to see that run out, but it took me out and then ripped up. So at this point, I was kind of in two minds about things, because obviously I've already got my short bias, thinking that, okay, we're going short. I was already seeing this as being EQ of the dealing range and thinking, okay, if this is EQ, that means that we've hit we've souped the previous day high above EQ, and so the fact that we got this big displacement, that should in theory mean that this is a short. I then dragged across this old previous day high, and sure, I recognized that we'd come really deep into the range, but then I drew out this order block. I was like, cool, we're hitting that order block. And I also saw this previous day high. Okay, we're stepping above that previous day high. And I'm trying to get more used to the idea of gold having really deep retracements, because it does tend to. Like, this could have easily sold off. So I did initially get shorts here, I think. I took a partial. It ran all the way back up, stopped me out right at the highs, but didn't take out this high. So I didn't have my stop at ERL. Had it sitting just down here after trailing it down once we got the drop, which I think was okay. I should have, if anything, been even more aggressive for my trailing of my stop. But yeah, stopped out. Then I saw it begin to roll over again as we dropped into 9 AM. And I really liked this as a failure swing, short left equal highs, but I saw a few situations last week where this actually did play out, where we had a perfect equal highs and a failure swing, and that ended up selling off really nicely. So I got short just in here. That works really nicely to start with, but failed to take out this low. I added right there. Then we had this pump that kind of scared me a bit, but I thought, you know what, I've already written down that my conviction on this trade is, I think it was 7.9 or something, so it's relatively high conviction. And as soon as we got this pump, we immediately dropped straight back down. So I thought, okay, well, maybe this is alright. But yeah, it got stopped out. So following that, I was just kind of watching from the sideline for a bit. So we ran up. We had 9:30 open right here in this candle. There wasn't too much going on. I had in mind that, okay, well, I've got a sell limit up at 53 up here. And I was open to getting in before that being hit if it showed me that it would, but I just missed this move basically. As you can see, we perfectly hit EQ of the range, just tapping above it at 9:47, consolidating a bunch, and then an aggressive drop down, leaving a nice breakaway gap with all this consolidation up here. And yeah, just dropping back down into these lows. Once we got back below the previous day high, you can see we have this nice short-term high made, turtle soup, and a nice drop lower. And then just a steady grind down the rest of the day. So And here on this, in this occasion, you can see the 3 drives. So 1, 2, 3 drives as well. This was a little bit on the tricky side to catch. We got 10 a.m. opening up and just pushing lower. I've seen this happen on Friday, in fact, as well, where we have 10 a.m. opened up, I think right about here. There we go, on this candle. And as soon as we opened up 10 a.m., it just pushed lower and distributed. So kind of a similar thing happening today with 10 a.m. opening up and just pushing lower straight away, and then putting in these intermediate term highs, and then just grind lower for the rest of the day. So as we were dropping down into the range, at this point I'd also kind of messed up my NASDAQ long idea as well, and I saw us dropping down towards these lows, taking out the sell side, and I kind of just made myself take a trade. What I saw, which it worked to a certain extent, and maybe I could use this as a scalp model in future. But obviously we've got all the sell side over here, so it hit all the sell side, including this sell side, so all that had been taken out. Really nice pull, like all that stuff down there. And I saw 11 a.m. open up, and I've been paying attention to the 1 hour PO3 recently, and I liked how 11 a.m. had engineered a low, rallied up, and then done 1 drive, 2 drives, 3 drives below. So I saw that like that. I was like, okay, so 11 a.m. opened, engineered a low, 1, 2, and 3 drives below that low, hitting all the sell side. Heats to move highs above. It's now 11. It's after 11:30, and we'll probably just run up into these highs. So I figured it's cool. Okay, nice little pump, and right here I was like, cool, buy. Got long, give a stop down below this low, and that just rolled over and took me out. And yeah, so that was just a low quality setup. It is cool to see how this did kind of work, where we have that low engineered, we have 3 drives very clearly, and then it pulls off. But I think if I am going to trade a model like this, I need to know that it's a scalp model, and the trade would actually be more like that. Like it would be as soon as the 3 drives happens, or literally on the soup with a slightly wider stop, just catching a scalp. Like it wouldn't be, okay, well we've had that big reaction already, and now I'm going to get in all the way up here, because that's way lower probability by that point, and I think you'd be wanting to, if anything, anticipate the 3 drives at a logical level. But in any case, it's kind of a lesser trade. This was my trade as well that I would have taken. I wasn't at the charts at this point, but as we're consolidating in here, I was looking, we've got a new day opening gap in the 20s. I've seen it play out a lot of the time where we do actually create a low there and rip. And we've got this old swing low inversion fair value gap to the left as well. So those confluences all together, my plan was as we drop down lower and soups below 20s, I was hammer the market buy as we drop below the 20s, and then just have a stop for below the new day opening gap, and yeah, which played out over here. I didn't catch it. I wouldn't have probably caught it, because as you can see, it wouldn't have got me in here because it perfectly hit the 20s, and I wouldn't have bought, and I wouldn't have bought here. And I probably wouldn't have been watching the charts at this point. So we'll just have been worn out. But it's cool to see it actually work out. But yeah. So that's essentially gold. And what I'm looking for now is, I think this should be the high. Like, I don't see why it wouldn't be. If I drop to the 15 real quick, we'll be able to see what we're looking at. Got a nice new opening gap sitting up here. Got quite a few, been in this range for a wee while now. But yeah, I was initially looking for us to draw up to the 50s. However, it is very reasonable for us to hit this range here, because we've got all these wicks in this area. We have nicely hit that. It's a nice liquidity pool. And I really like these relative equal highs on the 15-minute chart. So if I drag these out, so it makes a nice inversion for value gap, all relative equal highs that we just placed through. We've obviously got that previous day low up there as well, and this previous day high. So I'd like to see us pull up to this area. 3 relative equal highs right here. If we can pull up into this area, I'd be interested in taking a short from here. And yeah, to me, this looks like it should be good enough. I mean, it did only just hit EQ. So yeah, if I do just leave a limit in overnight, I don't know, it might just keep on ripping up. It might be best to wait for it to hit and then look for just to make sure that it's not going in one direction straight up. But if we do make our way up here, engineer a high, and then come and soup it and start breaking lower, I think this could offer a really nice short. So yeah, that's kind of the plan. I'll quickly show the executions as well. As you can see, history down 176 today, so quite a bit down. On gold specifically, I'll have a look actually, I haven't seen that yet. 112 on gold, so down 112 on gold. I'll leave that up for now. And holy crap, I took one winner on gold today, one single winner for $6. That is yeah, wow, that's something. I was up a few times on gold, but not quite what I was wanting to do with it, so I left it, but I left most of the annotations on. So yeah, let's have a quick look on the 1 minute chart. You can see exactly what I was looking at. So yeah, so this is that 7 a.m. 7:30 short kind of area. I think my mouse can be seen because I just updated my video recorder, but I'll use this just in case it can't. I'll use my crosshair just in case you can't see my mouse pointer. But so this was where I was thinking of getting long before we hit the previous day high, which is sitting up here. So I want to get long in this area, waiting for a drop down. It never happened. 7 a.m. opens up, rallies. It does the 7:30 right there, begins breaking down, low conviction, and didn't have enough confluence, so didn't take this, which was perfectly fine. That was a good thing to miss out on because it just wasn't quite it. Drops down into the range, then I see us engineer this low and rally up. I'm like, oh cool, so this looks pretty good. We've got a low. I think it'll probably head back up. I've got that long look on the 1 hour, so I'll see if I can get another run high. After engineering that low, drop down. As you can see, I nicely waited for us to create a wick, and as we started to move back up, I got him long. So that was a beautiful entry. It just wasn't quite the trade. And if anything, if I'm getting entries like this, I should be going to break even. Possibly. Have my stop sitting down here. Nothing wrong with that. It's just got taken out. So I suppose you could possibly read this as 1, 2, 3 drives as well. Not entirely sure, but you could also, yeah. I might add 3 drives to when I am buying a soup like this, and only buy the soup on the 3rd drive. That could be actually a really good addition. So something to think about. But yeah, following that, we had this rally up, and at this point I'm thinking, okay, it is looking strong, but anticipating a failure swing short, we simply ran above the previous day high again. So previous day high again was sitting right there, and I was like, cool, I know it can reach for deep premiums. I'm going to get a short here. We sell off aggressively. I'm like, oh sick, take a partial below the swing low, and then as you can see, I added straight back in, which probably wasn't the best decision, thinking that we'd just continue to push lower. That's got stopped out. We then begin to roll over. I recognize this is a failure swing, so that's what this is. Okay, that's what these annotations are for. Got short and just held that, expecting us to at least take out this low into the fair value gap. Got 8 AM open right there as well. That never happened, so taking it out, and then as it took out these relative equal highs, there was the 5-minute candle open from here, making the order block, and I relatively impulsively just smashed a short as we hit that, got stopped out of one, then closed the other one manually before it took me out. Yeah, and that was my reasoning behind these shorts, was that we had a smart money reversal from a new day opening gap, sweeping the previous day high at a premium. In my mind, this qualifies for a short. So the thing I missed here was that it was only in a short-term premium, and gold turns out wanted to hit that higher time frame dealing range premium, which was right up there, exactly there. And so, yeah, by missing that meant that despite this looking, this would have qualified if it had hit the premium of the range. That was only a short-term premium. And so, yeah, we hit premium buy side and sold off, but it wasn't the actual premium. So that's what I missed there. We have a buy here. Yeah, IDGAF trade. So clearly, I think at the same time I took another position as well, and yeah, I could tell that I wasn't feeling it. I wasn't concentrating on the chart, and I just was not in the right place to be trading at all. And I just took a trade anyway. So this was at 5 something. See how much this particular one costed me. So there'll be these two here. So 2 buys. So that was minus 13, 14 bucks right there for zero reason. And then we got the 3 drives below 11 AM low. That was the last position I took, and that would have made up for, if I sort by time. It looks like I took 3 positions up here actually. Yeah, I took 3. So, and then one was -9. So negative 14. Yeah, or negative 13 plus -9. So negative 22 bucks for no reason. It's kind of dumb. And then from there, this one all the way down to the low, all this last position, and that costs a fair bit actually. So 32, 37 bucks ish. So 11 AM low, 1, 2, 3 drives. Oh, cool! It's all good. So I'm going to buy all the way up at the top. If I'm going to take that kind of trade, I need to know that it's a scalp, and I'm getting in right here, and I'm going straight to break even once it starts moving. But yeah, that told me out there, and this particular one I just didn't realize had a stop loss all the way down there. Luckily, I've got my automatic EA that puts stop loss on for me, but that stop loss should have been up there, so that would have been the negative 15 loss. That should have been half the amount. So yeah, so that's already just from this trade here, the IDGAF, and this kind of lame trade that didn't really need to take it at all. Those two add up to a good 55 bucks or so. So that was not ideal. Yeah, that's all the gold trades, and yeah, so I'll jump across to NASDAQ. I'll go over here first. So I've got that same indicator up, which I'm only using for Forex, just to try and study a bit, but I'll leave it on here real quick. What I noticed is how we have on NASDAQ, we have obviously this rally overnight. Beautiful sell-off. It's really strong on the high time frame, but we sell off, and then 4 a.m. soups all the sell side, so shit ton of sell side taken out, and then ES takes out the Monday low. So low of week was taken out on ES, so that's SMT, really obvious SMT right there, and Nasdaq fails to do so. So it's like, cool, this looks really good. Then I look and I see how we've got this impulse high and a sharp drop off. I can tell that, yep, if we're probably going to rip straight back up here. Smooth highs up here. We've got the midnight price way up into premium as well. And it just made a lot of sense for us to continue to crawl up there. So that was kind of my thinking. And as you can see, what ended up happening is we consolidated, just ground higher, really high resistance, and then at 11:30 we absolutely tanked to a super deep discount and then ripped straight back up, creating SMT with that short-term low right at the low of the range. So I'll quickly jump over here. So on the 5-minute charts, first to look at the hourly real quick, and I'll just show you one little thing. So on the hourly, what I really liked overnight as well, it's how we had created this long wick at 1 a.m. and then after creating that wick, we souped it with this 3 a.m. candle and rejected nice and hard. And then I saw that as a wick soup order block, and basically that's a high conviction order block on the hourly, the 1 hour wick soup order block. So CSD, mark that out. I was like, cool, this is a nice order block. I know I want to get long off of this. If you look at this, it's quite interesting how we actually fell short of this short-term low when we came back down. So I'll create that into this. So we usually, when we soup a sell side pull, price likes to revisit it, and as you can see, we revisited it here. But also, this is quite a significant looking low. This one down here that we clearly came and attacked. This is actually the 9 a.m. low. This is probably even the 9:30 low. Yeah, so 9:39 from the previous day. So the New York session low. That is what we came and attacked. So we clearly came down here for the purpose of taking out that significant liquidity level overnight. And as you can see, we actually revisited that same level on that sell-off. So probably something to keep in mind is when we have had a really clear, obvious soup, is, okay, did we, after the soup, did we then come down and soup it again and then rally? Or did we just come short of it? And then maybe I can expect that, okay, well, maybe we will want to drop it down. And if we do and we show rejection, be a great place to get long. But in any case, this was a really nice long. Even prior to this dump, there were some nice trades in here. So I recognize I'm going to hide this indicator again. So we have, that's the hourly order block, and then as you can see, that sells off. And then we have this here, and I saw this as a propulsion block. So I aligned with the hourly order block, which tends to be really, really strong. These wick soup order blocks tend to be quite strong. And then we have this propulsion block, and I figured that on the 15 minutes as well, if I jump over there, where are we? On the 15, this all looks balanced. Like we've got all these wicks in here. We've got all these wicks, and that all looks really balanced. So I figured, well, it probably won't come very deep into this range. And if it does drop into this range, it's likely only going to that order block or the 5 minutes propulsion block, which is right there. It lines with it nicely as well. So I wanted to get long right there. I wasn't sure whether or not it would come below this low, but I figured that it'd be better just to get long with a wide enough stop loss, and the stop loss should go down below mean threshold of this order block. So my idea was to get long there with a stop down here. Massive TP obviously, and that worked really nicely. But I put on one contract here, just one singular contract, micro, and I then had a few more sitting just below this low, and the reason why is because we had perfectly engineered one tick off of the 800s, and I figured that, well, there is a good chance it will want to dip just below that. So I put a few limits buys down there as well. This is where I did make a mistake. So, that's fine and all, and I'm proud of myself that I didn't force that to be the case, and I still felt comfortable putting a contract on here. However, as soon as we got this, as soon as we got this rally up here, and then we started dropping back down, I started thinking, oh, you know what, actually, I'll put this in here. So I started thinking to myself, okay, well, it's come back up to this new day opening gap. It's probably going to roll back over down here. And so I took it off. I believe it might have even been up here. I think I might have even taken it off here. So I bought here. I was thinking, cool, I'm going to hold this, whatever. But then I thought, well, I mean, I'm up $20 or $18. If it drops back down, then I'd be down $20. So why don't I just take it off here, and then I can buy more when it drops down to this 4 a.m. price, which you could have done. And so I took it off, and it just rips without me. So then following that, I'm then looking at price, and we're sitting around about here. And I'm thinking, cool, well, that did work out. Now there's no reason to come back down here. We have this really nice all black formation, and I saw this has been quite balanced, and we were rallying a bit higher and consolidating in this range. And I figured that this should make a really good place to get long. So I bought as we dropped into this fair value gap on the 5-minute chart. So I bought here. It was moving nicely. I was up $100 or so. Bought again, and then eventually it rolls over, takes me out as we drop down. So I had a buy limit here, stop loss down here below midpoint of this range, because I want it to be like an IFD rally. That obviously gets taken out, but then I had another buy limit sitting down at these old relative equal lows, which was a nice entry. And my stop loss would have been down here, which needs fixing as well, because as you can see we came down here. But kind of thinking, cool, we've got these old relative equal lows here, and it's kind of like a balanced price range kind of thing. I don't want it going all the way down there. But yeah, so I did catch this long. I looked at the charts, we were up all the way up here. I was like, cool, really nicely in profit again. Should have taken more of a partial for sure, or quite a bit of a partial. Didn't. Came down, stopped me out. I got a little bit chopped up in this range. Eventually it sold off again. Super below the 20s, and I jumped in once again. And that did work out quite nicely. And as we began to rally in through this range, I was thinking to myself, yeah, this looks really good. Added some more up here. Took a partial. Then it started pulling back. As I started adding, I'll use the arrow again. So I started adding kind of, I don't know, maybe there and there and there, with a stop loss sitting roughly here. And the reason for my stop loss being there was I was thinking, well, this should be a, this should be a breakaway gap. Well, it wasn't. I did look at this particular range. I really do like this. And I was looking at this as a balanced price range that we've closed back above and failed to retest, and usually those can make incredibly good entries, which it would have in this case. However, it did still work a bit below it at 944, and then once again it came down and retested here again as well, really nicely. But yeah, got taken out about there. We then rallied back up. I could see that we're just pulling back, and it was actually looking quite good for a long. We're also consolidating below the 50s, which is this level right here. As you can see, we dipped below it multiple times. But yeah, so I got in long here again. So I'm pushing higher, looking really good. I even added in here, got a rally up. I took a partial, but then I started adding again. So let's say I bought in here somewhere. I would have bought up here, and then we rallied up, took a partial. As it pulled down, I bought one at the 80s, thinking, okay, well, it shouldn't come really deep into the range, really. I had my stop sitting all the way down here. Part of the reason for taking this trade, actually, I should mention, is if you look at this wick, we have a long wick, and we failed to hit the midpoint of that wick. So that's telling me, cool, it looks really strong, looks really bullish. And so my stop loss was below the wick that failed to hit the midpoint. And yeah, that got taken out. And at the same time, we're hitting the top of this box. So maybe my stop loss should have been below the midpoint of that wick, seeing as seeing as that actually played out. It's going ERL to IRL, we hit that, bounced off of it. I kept out of it mostly in here. I might have tried something at some point, I can't remember. Yeah. Eventually I went away, came back, I'd set a limit buy order below this short-term low. That got hit. I took a partial up here. I then added and then got obliterated. Well, I got taken out at break even over a small loss after adding. So it's basically a break even trade. And then I added again. I had a limit buy sitting down here because this is technically still internal range, although it is an intermediate term low as well. And clearly that's got destroyed. And yeah, and so at that point I wasn't expecting this big sell-off. However, as soon as I saw it happen and I saw where we were going to deep discounts. I remembered that on the high time frame we had that SMT with ES, where ES took out the previous day low. We failed to take out that previous day low, and so I expected that we should hold that SMT. So my idea was, okay, well, if I draw out this previous day low, which I'll just make green, if I draw out that previous day low, I should theoretically be able to buy all this discounts internal range and put a stop way down here. And obviously this happened super fucking fast. I also saw how, okay, well, we've dropped below this low as well. And ideally I want to be getting long below that discount sell side that we reached for. I managed to get a fill approximately here, so pretty darn good. In fact, it was about 20 handles off of that, so yeah, pretty much there. But only with very small size. I wanted to get more on, and then started pushing higher. We came up towards the 800s. I was up $60 after already being down for quite a bit on the day, and I was like, well, I'll just take it off here, and then maybe it'll drop down once more. Same kind of situation as I did over here earlier in the day. But yeah, it just reversed and continued pushing higher. I did on my top step account, I closed it there. However, on my 5K challenge, I took off half up here, the new opening gap, which was a good spot. And then I held the other half all the way up to this buy side. So that was quite a nice run, but it was with very small size, and I did want to get more on, but I didn't. But because I put the initial size on here, and then I didn't want to be buying more up here. I kind of like I wanted to get at least the same price or a better price. I didn't want to be buying up here, so I could tell that everyone else was probably thinking the same thing, which is why it just ripped straight up. So yeah, then I was basically done for the day. Last thing I was looking at is how, so as you can see on here, it really makes a lot of sense to hit this high. Just a really obvious high, massive sell off, and then everyone's who's going short within this entire range are all putting their stop losses above this high. So I really like the setup. This is a super high conviction setup for me, and that's why I was so focused on the longs this morning. All the way from in here, because I could just tell we are going to this high. I know we're going to this high. Really high conviction. I was just buying throughout this entire time, including buying a bunch in here as well. Just wasn't really thinking about this being a possibility of having such an aggressive sell-off. And obviously we have There's a lot of shit in this chart right now. So obviously we have this being a IRL setup. Once we go from this low up to this high, have that market structure shift, we then never return to EQ. We don't return to EQ here. We don't return to EQ here. And then eventually it does sell off like that. And then that's us coming back above there. So it does make sense from that perspective, but yeah, not ideal. Then by here we had just tapped it. So because we had tapped this impulse high, well, we hadn't actually. I thought we had. I didn't really perfectly look, but perfect equal highs of this anyway. So I thought we'd already had it. But if I had got long, so I was thinking when we were up here, you know what I think it's going to do? I think it's going to have a really fucking aggressive sell-off, really deep in the range, and then rip straight back up. That's exactly what it's done, which is beautiful to see. However, I would have put my buy limits just below this low, and that would not have worked out. So that's something to keep in mind, that obviously price goes to places to both to take liquidity and to engineer liquidity. And I think by falling short of this old low, it's actually engineering liquidity, which makes sense because we've got that new day opening gap here as well. So it wants to invite buying and selling within this range, this area. So maybe when we have a key level like an old low that I want to buy it, but there's a new day or new week opening gap just short of it, like I need to not be too greedy about it. But yeah, I didn't take it. But if I had taken it, I probably would have had my buy limits like there and would have been really frustrated. But yeah, really beautiful trade anyway. So yeah, the trade really was anticipating some sort of a sell-off, and then once we got it, just really hammering up, because I did have quite high conviction. Like right here, sure, it was really fucking volatile, and I just taken a loss or two. I did have high conviction that this is just going to reverse straight back up, and all through here I did as well. I just didn't want to buy up here. Yeah, I need to create some sort of a momentum scalping model so I can get in with these kinds of moves. But yeah, put in more size faster. But the thing is, like, it was working around a wee bit, and I don't want to put on a whole bunch of size, not sure exactly how much to put on, and then it would have been messy. So yeah, and I kind of only realized what was happening once we were already all the way down here. It just didn't really give me enough time. So now I will go over the executions on MT5 and on Top Step X. So jump here across to executions, and then I'll go over first the 5k challenge, and then on Top Step X for NASDAQ, because I only traded gold and NASDAQ today. There are my executions on the 5k challenge. So as you can see, there's that impulse high up in this corner that I was targeting. There's that order block, and this is where I was looking to get long. That's where I bought my Top Step accounts and then closed straight away. Then dropping into that fair value gap, getting long, getting stopped out right there as we dropped down into here. Getting long right away because my plan was to get stopped out there and get long below the sell side and below these relative equal lows. That worked out really nice. Caught a bit of a long, didn't get stopped out. Made actually quite a nice win just in here. I'll drop to a low time frame, but as you can see, trying more longs, getting stopped out, and also taking partials at good places as well. So definitely took more wins than I did on gold, but yeah, then getting stopped out and eventually trying to get long again and then just getting obliterated. Then putting on 0.02 lots down here, not having time to put on more, despite I put in heaps of buy orders down here. Never got filled. Took one off at the new day opening gap and one off at these highs. So that was essentially my day on this particular account. Now I'll bring this up. So this first entry, like it's perfectly fine buying that Bissy, just risking. I probably could have had a slightly tighter stop. I don't know if this actually did gap down on this platform or not. It might have, because my stop I thought was below mean threshold of this range, which would have been about here. But as you can see, we've actually got smooth lows there anyway, so it wasn't the highest probability trade, but taken out, runs up, drops back down, and then I'm like, cool, I like the sell side down here. Bought, closed above these old highs, which worked out really nicely with that fill. Added as we pulled back down a bit. Kept my stop losses down below this low, so you can see me adding up here, pulling down quite a bit, which isn't the best risk reward, but whatever. Then I close out the position as we hit buy side, close out some. It's a nice premium, and then I held a runner. So did want to hold a bit of a runner, but I figured that this was probably a breakaway gap, and that price wouldn't come down there. But then I saw this balanced price range, thought, well, maybe it'll come and tap the high end of that. So I put my stop down just at the low end of this inefficiency, and that was exactly the low. So once again, anticipating that the 9:30 open, you need to give it enough room. Ideally, you just want to be taking partials. You ever want to be ultra aggressive with your stop loss, like dragging stop up to here or something, and saying, okay, it has to IFED, or leaving it at an external range, which is usually the play. So in future, I should really consider doing that, like really, really fucking aggressively trading my stop, or just leaving it ERL. Added too much. Risk is okay, but still shit fill. So I was probably only risking $26 at this point, but I didn't like where I was adding back in. I think it might have been here that I wrote this. And then the same thing here, as we pull back into range. Not too sure how deep it was going to go. Probably should have waited for it to turn around. Stopped out, jumped back in because I recognized, okay, it was just a deep retracement. I liked how we're consolidating below the 50s. Added to the position. There's a couple of sell orders in there as well. Maybe I didn't like how much size I had. Not too sure. But then once we did start pushing up, I took a partial at this high. And then as soon as we got that push through that high, I knew that we were going to this ERL. So I added back in, which was really nice. Taking partials as we hit the ERL. But I only took about half off. Added here at the 20s, which was a bad idea because, it really is a bit of a premium. Once again, if I'm going to add aggressively, I need to be trailing the stop loss aggressively. I can't be adding to my position aggressively and then leaving the stop really deep or not quite deep enough, as we see in this case there, and with this perfect stop out. What gave me confidence in this long, as I mentioned before, is this long wick with a failure to hit CE of that, and so I really liked adding here. But at this point, we'd hit ERL, and really I needed to either be super aggressive with the stop, so like putting the stop down here or something, maybe below this short-term low, or just waiting for an ultra deep, expecting it to have a deep retracement, because this is technically an intermediate term low. That's a short-term low, so coming down here is perfectly fine to remain bullish. List account, I stayed out after that, which is good. As you can see, it makes a failure swing, then has that big sell-off. Here, I had set a limit buy on my top step account just here, which worked out nicely, and then I took a partial, and then I decided, oh, you know what, I'll trail my stop up to here, and I'll add back in, and it just wasn't bullish anymore, so that's fine. As it did begin to sell off, I set a buy limit down below this low, seeing as this was technically still in turn range liquidity, but it is also a intermediate term low. So, I mean, it wasn't the best trade. And it didn't even give me a bounce. It just obliterated low. So, as mentioned earlier, I did recognize that this was looking really good for a nice flush to get long on, and I was quite confident in it. Got a really nice fill, but for only 0.02 lots. I tried to get more on. I put some limit buys down here, but I just wouldn't quite reach it, and then just started pushing higher. So I made sure that despite not getting the size one I wanted, I still took partials at the right places, which was good. This is a new day opening gap sitting up here. And then the last one, as we hit this buy side, took one off there. So did good there. And yeah, that is all for that. And then jumping across to here, this is relatively low probability, but I just saw how I just wanted to see this as being a enticement, deep retracement, took out a short-term low, trailed stops are going to go from here down to here, and I figured that we could leave relative equal lows, run up, soup these old relative equal highs here, and then sell off. So that's what I was looking for, but rather, so yeah, my thesis was that they had this rally, they came down, took out this short-term low. Now I want to see them rally back up above these old relative equal highs, and then from there, head lower. I did think of getting in here and putting a stop even further down, like down here somewhere. Then I figured, wait, why would I risk 3 times the amount? Like if I think this is the low, then put my money where my mouth is, and yeah, so it's high risk reward, but I don't have the best conviction, and as you can see, this is quite an enticing rally that we're dropping back down towards, so it could easily take me out. So yeah, I just gave it a little go really, but if I turn on executions and I'll go over that. So here's that propulsion block that I got long on, and then closed out really fast, thinking that it might just roll over once again. Prediction tools, where are they? Drawing. Here we go. Path. There we go. So yeah, so obviously I thought that I saw this as being a really high probability long, putting a stop down here somewhere, but then I thought, oh, maybe it's going to go like that and then up, and so I took it off, and yeah, didn't quite catch it, unfortunately. But the idea was to go along there, have a stop below this main threshold of this order block. That would have been fine. I also had some buy limits sitting down here, which we never hit. But that is also why I actually went long in here somewhere. Roughly here I went long and got stopped out immediately. Then we got, this was that 5-minute fair value gap. You can see I'm getting long in that. And then getting stopped out as planned right there. Getting back in with buy limits below these old relative equal lows at 31, so just there. So really nice fill. For some reason, I was away from the charts right at 9:30, and so prices all the way up here would have been good 180 in profit or so. Didn't take anything off. Pulled back, ran up once more, and I got one off at 59, so at these old highs, which is a beautiful fill once again. Sold off again. I added back in pretty much straight away, only 14 handles below. So literally from there down to there, and I added back in straight away, which doesn't really make sense. Same thing I did on the 5K challenge. And then held on to it. It was a bit of a drawdown, obviously. I had my stop sitting down here, really close to my stop. Mitigated one. But then as soon as I saw the strong closure through this civvy, I could tell that, okay, it's not looking bearish anymore. I am still bullish. This is fine. So jump back in with 2 contracts here, which was really nicely done right at the 52. So just there, beautiful fill. And then took one off at 59, so only 7 handles later, took one off. Possibly could have held it a bit longer, not sure. Yeah, and then the exact same thing, so took partials up here. I added 2 on here, so I was obviously holding 1 still. Added 2, one I added up at 60.75, so all the way up here. So that was one add, and then the other one I added down at the 51s with a buy limit. So all the way down here, which is not too bad. But then getting stopped out right at 35, so getting stopped out here. So yeah, in future, when we have a big run, be ultra fucking aggressive with my stop loss. I'm moving my stop up to there. We have to leave past this BISI open. That should be their criteria. And not just buying here, but rather waiting for it to actually show that it's looking good, and then jumping in. And ideally just taking it all off. If we have a nice move, then take it off and look for a different entry, because that's one good trade done. So after getting stopped out, same thing, I saw that this is looking really good. Bought 2 just about there, a bit lower, so really good fill on that. As we pushed higher, didn't take a partial because I recognized this is looking really good, so I actually moved my take profit away, added into the position up here. Was quite confident in this trade, mainly because of that long wick CE not being hit, which is really nicely done. And it worked out perfectly, ran all the way to ERL. Unfortunately, I only took 1 out of 4 off. So I had 4 on, I took 1 off, and then I had 3. Added 1 back on right away, right there. So I took 1 off here. No, hold up. Okay, that is really bad. I took 1 off here, and then I added it back on at the same price, exact same price. So, and didn't trail stop. So I turned a 4 lot winner into a 7 handle loss. So I bought at 47, sold at 40. So I essentially if I actually draw this out, this is pretty ugly actually. So that's my entry for 2. That's my stop. Really nice restored. Let's say we just target that high. And then I've got the other entry, which was at 67. So there, I would have had my stop at the same place. Diagonal the same. And I let all that become a complete loss. 7 handles from here, and also from this entry, an entire 26 handles. So that is pretty ugly, really. After having a really nice win, like this is a nice win. That is a pretty darn good trade by itself. Even if I just held to like this premium order block where I took that partial, that's still almost 5R. If I trailed my stop up, let's say I'd said, okay, well, I really like this, looking strong. It shouldn't come below the midpoint of this wick, so I can put my stop roughly here. That should be safe. I'm going to trail this up, so it's now break even. I could have held that and then taken way less of a stop out. And even if I had taken 0 partials in this situation, that probably would have ended up roughly break even altogether, but it ends up being a loss. So that is not ideal. And I'm just going to quickly go over to stats and see what that looks like. Just got stopped out, it seems. Oh no, I'm still on. It's just sitting in my entry. So I want to see what this looks like exactly. So this is the entry at 9:46. They're getting stopped out at 9:57. So 9:46, 9:57. So that's kind of where I was getting stopped out in this dip here. And 9:46, that's where, hold up, let's see. So you see exactly where this is. Oh, 9:46, hold up. 5, 6. 946 where I got in. I got stopped out at 944. For some reason there's a little spike there. And yeah, well I took, yeah, that's right. That would have been that partial I took at the premium order block, and then I added back in, and that would have been all the way down to here. So I would have lost a couple of hundred there after being up probably 150 or so, which altogether that's like a 300 plus swing that should have been at worst break even. Yeah, it's not ideal. Yeah. Oh, don't do no market wise, thank you. So that was that. I then has a so yeah, I had my stop loss sitting below that short-term low. Should have really been below the, no, it shouldn't have been. I mean, obviously it can come ERL to IRL, means that this is all free range. It can come down here perfectly fine. So stop loss should have been down here. However, because of the situation we're in, I should have been really aggressive with stop loss. It should have been at worst below that low there, below the midpoint of that wick. So really, like initial entry, sure, like that when I got in here, stop loss down below this wick, obviously. As soon as we got this rally, and I see the signature with the fail to reach the midpoint of this wick, which is right there, then my stop loss goes here. As soon as we get this push above this high, then I'm moving it up with it. And if I'm going to add in, then I'm now expecting, okay, it should not come below the midpoint of this wick. And then as soon as I hit ERL, I'm trading myself all the way up to there, being really aggressive, taking partials, saying, okay, if it's going to keep going, it has to just push, which it didn't do. So I would have been stopped out in profit with multiple partials. So at this situation here, I put my stop below ERL, which is this low down here, and bought below this internal range, which worked nicely. Took a partial, tried adding back in, tightened my stop, which is good because I thought this would be a nice order block that should hold. Got stopped out. Here you can see I bought below. Once again, this is that internal range liquidity that I bought at and got stopped out immediately. I did buy again in here and get stopped out instantly, I believe. Just trying to think of exactly where, because I saw this as a propulsion block. I wasn't expecting this to get taken out. So that did take me by surprise. So you'll be able to see that I bought at 792. So it had already dropped into it. I bought right here thinking, okay, we're in that propulsion block. I had already been planning to buy here. As you remember, when I bought this position here of one, I actually had a buy limit order sitting here for 2 contracts. So once it dropped back down with this aggressive move, I thought instantly like, oh cool, this would be a great place to jump in. And I bought into it, and then just got taken out immediately at 763. So essentially as we hit the low end of that. So I didn't even have time to really put my stop in the correct location, which should have been here. I ended up getting stopped out all the way down here. So yeah, stopped out for 2, and then I bought 1. I bought 1 down at the 50s, 55, so really nice fill. Pretty much as soon as I got stopped out, saw the spike, saw it start rejecting, and thought, you know what, if I buy right here, we still have that SMT with the previous day low, really close proximity, so it did make a lot of sense to buy here, and then I can just put my stop below that previous day low right there, which is really tight risk. I was still very confident on that being the draw, and that would have been a beautiful trade, but I only managed to get 1 on, unfortunately. And as you can see right there, I took it off, and that was simply because I didn't have the size I wanted, which partly I wanted more size on, and because we had already had a nice move up, and I was up 60 after being down 450, I figured, well, you know, it's given me a nice move. I wouldn't want to just leave it on in case it came back, and find most of the time that does work quite good, just to be locking something in, but it'd be better if I had, 3 micros on, let's say. You take one off there, then take one off up at the buy side, one at the high. So just didn't have on the size I wanted. As we pushed up, I need to investigate in how I can create a really nice momentum scalping model to be able to catch this. So everyone just gets stuck in these kinds of moves. Now no one wants to jump in. I was hoping I'd have a little wick down and a jump in there, but probably everyone was thinking that. But really I need a model that says, okay, I can buy right there with a previous 2-minute candle stop. That would actually make a lot of sense, because when we are in an aggressive move like this, and I think it's going to continue, the 2-minute stop loss, it does actually make the most sense to use. So I could use that as a potential momentum scouting model. So yeah, but that pretty much covers that. And I already went over it here. So in general, looks like it's moving. I'll take a partial somewhere. Take one partial here. There we go. There we go. So in general, what I did good at and what I made mistakes on today. So this is on NASDAQ. I did really good identifying this as being a high probability framework of being the draw. That's a beautiful model. I did a good job of buying this order block and not letting this perfect retest to the 800 completely skip me out, but I did unfortunately take it off too soon. And that happened down here as well, where I had a trade idea, didn't have on the size I wanted, and just wanted to take something off. One thing I did notice actually that you can really see in this chart is this is a market maker model, obviously. So we've got this market reversal down here, and then we've got a intermediate term low put in here. So intermediate, so that becomes the first stage. And then after the first stage distribution, which is this push up, so that's first stage, we then look for second stage. In a market maker buy model, there's always going to be 2 stages of distribution into buy side, and that in turn actually, it doesn't always have to only be that many, but there'll always be at least 2. But generally, once the second stage has happened, it becomes really low probability of it continuing. So if we have this right here, this being the first stage of distribution to buy side, some people will call it accumulation, but we're not accumulating nothing, we're distributing. And then we have the pullback, and then this becomes second stage distribution into buy side. So once we get that, and then it shows an unwillingness to continue to go higher, we've already had the market maker model play out. We've already had the both stages of distribution play out, and so unless it's going to keep on pushing, and it's probably going to reverse. So that's something I can keep an eye out for as well. It's just looking out for, okay, where are we in that context, and we're just going to go from there. Next thing is that I want to observe is obviously we've got the internal range liquidity set up, which is this low to where we shift above these highs. So shift market structure, we never return to EQ. And just keeping that in mind, especially if I see signatures such as this perfect retest of 800s. The next thing is, what liquidity did we clearly intentionally raid? In this case, the New York low from way back over here. Really obvious sell side pull that we clearly made vertical lows with and then raided. After raiding it, expecting us that we're likely to come down and dip below it once again, which we do over here. The same thing can be said with this first stage of distribution, and we have that sell side pull engineered that we're swoops below. We then dip below it once again, so that's really nice to see. And then something to keep in mind in here is that we are looking super strong on the high time frame. We also have the 22k level sitting just up here. which I'm expecting us likely to rip through for NFP. But just watching this low, this is clearly a low we engineered to soup, same as this one, but especially this 9:30 AM low, and we fell short of it in the PM session. What could make sense is we've now hit ERL, as if we go ERL to IRL, and we could even see something like that. So that's something to keep in mind going forward. But in general, I did really good having the perfect framework and really trusting it all day. Like I knew I wanted longs. I just tried multiple attempts and wasn't expecting this flush out. I was really fast to jump on side, but when I did jump on side, I wasn't fast enough to have to put on enough size. So yeah, if I can be faster putting on size, it's just a bit difficult if it's something you're not really expecting. That's the only problem. But faster putting on size, and then also momentum scalping. I reckon I will actually backtest and look into that 2-minute trailing stop scalping entry. So when I think it's going to be a fast move, and then I can go to the 2 minutes, and I think it's going to keep on going. You never know for sure, but I can tell that this big flush out lower. I think it's just going to keep on going. Then I can go in and go, all right, I'm going to buy exactly here as this candle closes. And now I know that my stop loss just has to be below the trailing 2-minute candle low. So once this closes and this one opens, as soon as it breaks the high, I can move it up to here. The stop loss. Sorry, if that's my entry on that candle close, then my stop loss initially would be below the previous 2-minute candle. But then as soon as we start pushing higher, then I can try up below this candle. Or because I was actually looking at the price action down here, and let's say I got in here, obviously the stop will be very wide at that point. So maybe you just wait for the next 2-minute candle closure right there, and then go, cool, now I can put my stop down at this low, which is the exact same, but yeah. That's an idea for momentum entries. Use a momentum stop as well, which obviously is very logical to say. So yeah. And then as far as gold goes, the main lesson is don't look at this dealing range, but sure, we can look at the lower time frame dealing range, which is this one, if we're in a distribution from wherever, like down through this range, I'd be looking at from that high to that low. Then I'll be looking from that high to that low, or that high to that low. But once we've, begun pulling back a bit, and there's a possibility that we could hit higher, we're more than likely going to head to the high time frame EQ. That happens on all time frames, like a lot of the time, like including here. You got, obviously there's shorter term dealing ranges, but then we end up referring to this one all the way down to here and coming back to EQ. So keeping that in mind, that would have helped me to have trusted that we were probably going to hit up here. And also when I saw this wick on the 1 hour chart, the 1 hour 7 AM wick, it didn't look like a high had been put in. But then I thought, well, I mean, it hits premium in 10 range liquidity, but it was only premium from this high. That's the problem. So, and that got ran out. So in future, look at the high time frame EQ, especially if things are looking dodgy on the low time frame. But yeah, it's about it really. Yeah, I'll have a quick look at my stats, but the stats in general, like it was pretty bad P&L wise day. Negative 554, straight down, and then a pullback at one point. A few of these trades were on the open. I was up a good 100, could have had like a plus $100, $150 day. Just never took it because I was looking for that larger move. And then later in the day, kind of around 11 AM, I did take a few trades that just weren't that good, which I can quickly show on gold as well. And held the trades for quite a while. So like I had a clear idea of what I wanted to see. It just wasn't panning out how I expected. So yeah, not the nicest stats really. And I'll just quickly show what that trade was on gold that was a bit ugly. So that was this one. So there's buying on gold. You can stop down at the lows, perfectly at the lows. And then trying those shorts, taking a few partials, then get stopped out. I'm not sure exactly what this was. This was just a mistake. That's right. I clicked over here and it was on the wrong window. I was trying to execute on NASDAQ. And then that was that trade that I wasn't too sure why I took that buy. And then that's that 3 drives below the 11 a.m. low. And yeah, just being kind of a low probability trade. This one over here, I do like that pop up. I do think this could play out. I'm going to leave it. How it is, I've now got my stop below the midpoint of this, what I'm seeing as a balanced range. But yeah, I'll have to see what actually happens. It might suit me out. But I am willing to hold this, and if it does reach up to here, take one off, then I'm going to hold the last one up to this premium internal range, and if we hit these relative equal highs, I'll investigate whether or not a short is in play. That's the game plan, and yeah, see what CPI tomorrow does.